The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out today looking at the long-term view of the DAX here. You can see this is a weekly chart. Got a couple ABCDs in formation here. And I think if we move down to a little tradable 4-hour chart, 60-minute chart, you'll be able to see that we are completing some serious ABCD patterns up in here, but they could go a lot higher. So let's pay attention to that. Now, the other one that we need to talk about is the FTSE. One of the things that I wanted to mention before we look at the FTSE chart, let's post the FTSE, and then I will, because this is a 60-minute chart that looks really interesting. It's already made some type of a top, but that's a double top too, by the way, folks. We have Stan Harley as our guest today at 9:30. That'll be good. I'll be doing the Tom O'Brien show between 3 to 5 today and tomorrow. And I'm going to have a very special guest tomorrow, hopefully, and a special guest today, of course, during the Tom O'Brien show will be Rich Anderson. We might have another pop-in guest too, but it's going to be interesting, and we'll see some of these patterns unfold that we're looking at as we go through some of these things. And we've said for quite a while now that we thought that bond chart topped up there at that 150.20, and it certainly has. The question is, you know, where is it going to go from here? Some support is down here at this 146.16 level, very small amount, but there is some support there. I do want to spend just a moment to talk about Lyft, because this is one of the things that we've been following since the stock came out, and I mentioned to you, and I also showed you the example of what happened with Google and what happened with Facebook when they first came out. When they made these big ABCD patterns, and as you can see here, when we put this together, we did this actually on April the 4th, and here we are coming into the 16th, and we've got that ABCD structure that comes in right around that around the 53 level, and the 1.618 expansion is at 5150, so we're within, you know, a very small amount, just about 4 or 5 points from the exact ABCD pattern, and that should be the first bounce back. And if it follows what it's been doing, the first bounce, we went from 66 up to 76, so we rallied $10. So if we get to 52, we should rally to 62. And what would 62 be? It would be the 61% retracement of the high that we made on April the 5th. So let's watch Lyft unfold. There's a lot of action going on in there, and you remember these companies don't make any money. They're the largest transportation companies in the world, yet they own no inventory, and they don't make any money. You know, that's a pretty big feat, I think. You know, I don't know what it means, but I've never used Uber, I've used Uber, but as a guest of somebody else, I don't have an Uber account or a Lyft account or social media. I have the Dinosaurs RS card, which is very, very good. It's only valid in one state, and that's Alaska, and that's only between 12 a.m. and 1 a.m. on Sundays. So if you get that card, you don't have to worry about paying it off because there's nothing open up there at that time. All right, let's get back to something serious, boys and girls. We want to watch the gold. We've been talking about this for months and months, and we got a real shot at it now, folks. We broke down below those lows. We haven't taken out the 1280 yet, but we got to 1281 so far today, and we are getting very, very close to what I believe will be one of the best buying opportunities in gold that we'll see in a long time. That comes in around 1260 to 1256. The ideal timing for this, as we talked about yesterday, I'll repeat it for those of you that weren't listening. If you look at the head and shoulders pattern that is here, folks, the left shoulder in December, the head in August with the eclipse, And then we have the right shoulder coming in here on the 22nd, Monday, which is going to be right after the day following the holiday. If we get a big gap down in the gold, that would be an ideal, situation, for buying the gold. So I think it's something that we ought to take a look at. We've got a Sun conjunct Uranus that day, which is really one of the key things for soybeans, and it might even help the gold, but it's certainly going to be a big day in soybeans, I would believe, at that time. So let's watch this very, very closely, folks, because we've got a real interesting pattern coming up here in this gold. This is really a great pattern, folks, because at that level, at that level, you'll notice you'll also be at a 50% retracement of the low we made down at 1168. So that'll really set up nicely if it can get there. You've got 1, 2, 3 ABCD patterns coming in there. You've got a 61% retracement coming in from the November low. Boy, this is a 1.618 expansion from the March whole swing in March. So that's what it's looking at. And as we mentioned yesterday, the same thing is happening in the silver market. We did go under 1280. Very interesting. We'll see what happens. No, I do not have a Motorola flip phone. It is a LG, one of the Korean ones. It's very, very expensive. It's $25 US at Walmart with your senior citizens card. And I don't take text messages or anything like that. And that's the way it is. Folks, I am just let me tell you why I do so poorly with computers. When I got out of graduate school, I was in science. I had a master's degree. Well, it don't make any difference. I went into pharmacy school. That's no big deal. Got a master's degree in business. No big deal. I had an interview with IBM, and at the end of the interview, the next day I came in to see. I had already accepted a job with Lilly. I just wanted to see what IBM was offering, because Lilly was the best job around in 1962 or 63, and 62, one of those years. And when I sat down with the IBM guy, he said, we go all through the Midwest, doing these tests and hiring people. This is one of the lowest scores we've ever seen. He said, "Are you sure you graduated from college?" That's what he told me. And I was pretty smart in college. I didn't get dumb till later. But he just literally destroyed my, it was all about software. I didn't realize it had nothing to do with sales. It was all about software, understanding software and the theory behind that you have to think of going through software. So that's it. I did have the wingtip shoes, though, Mr. Z. I had those, but that's it. That's it. Somebody, you guys are really beating up on me today, but someone emailed me yesterday what was one of the silliest things I ever did in my life as far as buying something, and I don't know if I can do it now, but when I went back to Lilly in 1970, I was bucks up from the silver, and I really had the world by the tail with a downhill drag, and I bought a brand new car, a little sports car, and unfortunately, the president of Eli Lilly had bought the same car in the same color. And boy, did I get a lot of flack for that. Didn't help me at all. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart for the gold up here so we can get a better idea of what we're looking at. That date that we're looking at on that head and shoulders comes in, as I mentioned, on the 22nd of April. That's on Monday. We're closed on Friday due to the holiday. Probably won't have that holiday much anymore the way things are going politically, but let's at least enjoy it this year. Let's take a look at that number down there we're looking at is between 1260 and 1256 per ounce. That's going to be a really interesting time. Now, the problem is if we get down there with a real long-ranging bar, it's going to be difficult. The ideal situation here in gold, and I don't, we'd always get ideal, but if we could be down just, today, somewhere around this area right here, taking out those lows that we've just done below 1280, there'll be stops there, of course. Maybe a little bounce, $11 to $15. I don't know. Could be anything. And then come down one more time into Wednesday, Thursday, and then Monday. If we could open lower, maybe gap down at that 1265 or 1255 level, that would be ideal place to take a look at it. Risking about $10 is what I would guess, because the way we're jumping now, I would think that would be the most you would probably get. I don't know whether it's going to get there or not, but right now it's working. They don't always work, just like that lift thing. We're looking at possibly $53 a share. I don't know about you, but I would rather buy it at $53 a share than $72 a share. It's the same thing with Facebook. Facebook dropped in half when it first came out, and it went a little bit higher. It opened at 42, went down to I think 19, and then is now trading at about 180. So, and it's been as high as 200. So all I do is the patterns, folks. I don't do any fundamental work at all. I never read a newspaper of any kind. I get my news from the Bloomberg usually, just to see what's going on. I watched the fire yesterday from Notre Dame over there in France, and out there in the middle of that island out there. It's a really cool place out there, but I'm surprised the whole thing didn't burn down. But anyway, they'll rebuild it. I see that the big people over there, the billionaires in France, have already donated $330 million. That'll cover about one of the paintings, I guess. But It's going to be a lot of money lost in that deal, whatever the fire was. We'll have to see how it started and everything. They'll probably blame it on somebody over here, but, who knows? We'll have to wait and see. Let's take a look at the Bitcoin, folks. We've been following this for some folks that have had an interest in it. I want to bring it up and see it here. We had that big move up there to that 55 area, 54.50. Now we're backing off. Now the 382 retracement from the low we made down here in December, that low comes in April, or in the Bitcoin comes in at 4,600. Watch that very closely, folks, because if it takes a couple of weeks to get down there really quietly, that's going to be you don't have to buy Bitcoin if you don't want to. We're looking at this on a technical basis. That's all. I don't know anything about these cryptocurrencies or blockchains. I just listen to what John Jameson tells me. He's been telling me the right thing for quite some time. But this is what we're looking at. 4,600 would be the pullback. That would be about just about a 9% pullback in the Bitcoin. And from that level, we could start back up. Remember, there's been little more than 80% corrections in Bitcoin since it started in 2007, and this is the last one. So we'll see. Litecoin is one that is big, and it's tough to do that, Mr. Z, because all of these different ones, Litecoin, Bitcoin, Ethereum, Ripple, and Cardano, all of those have different ideas, and this is the wild, wild west, folks. This is like tulip bulb stuff, or the South Sea Island bubble. You don't know which boat's going to hit the island. That's pretty much it. So you throw a few. Hey, the good part about it is, like Cardano is selling for about 10 cents a share, and that's the one that Mr. Jameson likes quite a bit. And that's Luigi Jameson, by the way, a very distant cousin of John Jameson. But that's from some dudes over in Hong Kong that used to be with Ethereum. And they're doing their own thing. So that's the one that you might want to pay a little bit of attention to. But you've got, 81 different exchanges for the cryptocurrencies, and CNBC did a special showing that there was 70 of the 81 were basically rip-off scam artists. You got to be careful, folks. They got a lot of different ways to take your wallet money, that's for sure. I had an interesting experience today, folks. Today, CNBC had an old picture of Sue Herrera 20 years ago when they started CNBC, February 1990, was it 1999? Yeah, February 1999. That's when they started CNBC, I believe. And she was the one that took the idea to them, and it was really, really good. So we'll see if that's the case. Now, that's my friend Mr. Byron Tucker calling in, and I will have to tell him that I'm on the radio show, and he has forgotten. So that's neither here nor there. Anyway, we'll take a look at these as we go through. Sorry about the phone ringing, folks. I just don't want to reach over and turn it off. I'm going to have to, I guess. Anyway, I'm going to make him. Byron, I'm in the middle of a radio show, buddy. Let me call you back. Okay, pal? You bet. Bye-bye. Okay. All right. We got to have some more time here to look at this. We're trading at 1277 in the gold. We're now 20 handles away, boys. 1257 would be a really nice price to buy the gold, would be my guess. I don't think you're going to get it today, but you might. I don't know. Oh, okay. All right. There was I just got a Skype message from Byron. Byron has a home out here in Arizona, and I get to meet him for a couple days this week, Thursday, Friday, Saturday. We're going out to do a bunch of fun stuff. And his plane didn't get in until like 1 o'clock in the morning, so he had forgotten that I'm doing the radio show, which is not unusual. Okay, I will be doing the radio show between 3 and 5 today for Tom O'Brien, and also tomorrow. I'm going to do something a whole lot different than I usually do on some of these things, so we'll see. Okay, let's take a look here. All right, here, let's move on to some of these other things that we're looking at. Someone asked a question about the bonds. Folks, I think those bonds have topped. I really do. I mean, we hit that big number up there in the bonds at that 150.20, and it looks like it's it's spot on. We're down to what? What did we get down to? 146.14 or something this morning. I mean, that looks like it wants to go lower. That's it. Yeah, Maria, spot on, dear. You did a great job, and booking a nice profit there. There's nothing wrong with that. Just remember, the bulls make money and bears make money, and pigs always lose, and they also poop on your porch. So don't get too greedy. So that's the key to watch. All right, we got Stan Harley coming up at the break here, which will be some fun, and he's always got some great stuff for us, and we'll see what happens. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Stan Harley of the Harley Stock Market Letter on the line. How you doing, my friend?
Good morning, Larry. I'm doing awesome.
Is this your first Easter in Arizona? Have you been here a year yet? Second. Okay.
I've been here before. Indeed, yes.
Okay, good. Say, listen, I want to congratulate you on, saying that we were going to have an up market, and we've certainly been going higher. Do you see anything here that lights up the light? I see you've got a bunch of clustering between April 12th and 17th, and today's the 16th, so tell us what you're looking at, my friend.
Yeah, Larry, we've been in, as you know, we've been in a pretty strong uptrend since the Christmas bottom. We had just a confluence of cycles that came together in that time period that you and I have talked about in the past, and we're powering higher here. And ultimately, I do think you're going to see this market in record high territory. We're popping open today. Whether we punch into new high ground here this week remains to be seen. I am looking at the potential for the rally to stall out right in here. If it does, it won't be a bull market killer, but it would give us a setup that I've seen happen in the past. I have just a plethora of Fibonacci numbers all clustering this week, as you know. So we'll see. If we get a stall out here, we'll have what will look like to some would be a triple top. You know, we topped out and put in a high in January of 2018, another one in September, October. We could be making another high right in here. I say could because I need to see evidence of it, and we don't have that yet. We're still going up. We haven't turned down, so I can't say that, but I'm suggesting the potential is there because of the Fibonacci work that I have. If we turn down from here, I would see about a month-long consolidation into mid-May, and then we would pop higher. We'd have a setup that I haven't seen happen in about 20 years, but what it entails is the market as it rises makes 3 initial stabs at some overhead resistance, and those 3 initial attempts to break through resistance all result in failure, and the market backs off. And after the third one, a lot of people scream triple top, triple top. But what is really developing here is a profoundly bullish setup. And W.D. Gann, a awesome technician of the last century, saw this occur. He coined this pattern the rule of 4. And what he said is what I'm laying out here is the initial 3 stabs at overhead resistance all fail. The 4th push, the market punches through that overhead resistance and just gaps and goes and never looks back. So if that were to happen, that would suggest a breakout to new highs in late May, possibly early June. And I do think you're going to see the market in record high territory. I also note that despite the Dow and the S&P and the NAS being right up near all-time highs, the transports are lagging. The Russell is lagging. The New York Composite, which is the broadest measure of all, is lagging. That's on the negative side. On the positive side, Larry, the New York Advanced Decline Line is in record high territory. So it's a bull market, but whether we see new highs imminently here, well, the jury's out on that. We'll know here very, very shortly, certainly by the end of this week, I believe.
Stan, I have a question about, you do a lot of work on regression analysis. Do you want to tell the folks what's that about and what it tells you about the market?
Yes. What I do in my analysis, I will look at charts and initially make a visual estimation of what I think is happening in terms of ratios, in terms of time counts. And then I get a little bit more specific and I punch the numbers into a spreadsheet. And by looking at Fibonacci relationships and putting them into a spreadsheet, I can model mathematically the various turns and the various ratios. And regression analysis is a mathematical technique that essentially allows us to find the best fit to the data series. So if I punch in a data point like the high in May of 2015, the low in February of 2016, the low in November of 2016, and so on, I can then develop a mathematical equation, use that to find the best fit, and then I can use that as a predictive tool going into the future. And I also know what the historical standard deviation is. So I can say, okay, I'm looking for a turning point in this period of time, and the standard deviation in the past has been X number of trading days. So that gives me a window of time either side of that turning point. It's a technique. Yeah, it's a very powerful mathematical tool.
Wow, where did you pick that up from? I mean, is that just from your technical background or from school or what?
I learned. I personally learned that technique when I was in graduate school at UCLA when I was getting my MBA back 30 years ago.
Okay, wow. That's pretty cool. One thing about, you know, people of in the den here and at TFNN, they've always marveled that you know, I don't know about the number of trading days, but you've been within 1 or 2 days of the exact high or low many times. So that's a real hats off to you. That's probably why your letter's so successful. So I want to thank you for being on the show here. You know, just talking about this. This is super.
Well, thank you, Larry. I do my best.
Yeah. Well, we all do that. Stan, I have one question. One other question.
Sure.
How much do you weight the fact that the market's, you know, the advanced decline line is moving good, new highs to new lows? Do you weight that with any special way, or do you just use that as an observation?
Yeah, it's a good question. I probably depart from others. There are some technicians that are just card-carrying advanced decline line geekies here. I'm probably not in that camp. It's something that I take note of. I look at market internals. I look at advances and declines, new highs, new lows. Yes, I factor them in my analysis, but I don't give them a heavy weighting. Yes, the AD line's at a new high. That tends to presage new highs in the New York Composite. A lot of people mistakenly say new highs in the AD line leads to new highs in the Dow and the S&P. No, the data comes from the New York Composite Index. But as a general rule, yes, divergences either in the positive or the negative with the AD line tell us a lot about what is about to happen generally. Market tops, typically the AD line tops out ahead of time and warning of a market top. That's not 100%, but that's probably 90%.
What about the Dow theory? You know, the transportations and the utilities, you know, used to be from Richard Russell, you know, used to say they had to be, you know, confirmation in transportations and the utilities to verify a bull market. But God, that's going back 50 years, I guess, with all the ETFs and all the indices we have now, that's probably all changed.
I think looking at a number of indices is important. I probably take it a step further, Larry. I look at what I call the big five, as opposed to the big three, the industrials, the trannies, and the Utes. I look at the big five, and for me, the big five are the Dow Industrials, the S&P 500, the NASDAQ Composite, the New York Composite, and the Dow Transports. And so I want to see all five of those confirming either a bull move or a bear move. And when one or two or three of those start falling off that list, then it pays to take notice. I also look at the European markets, Larry, particularly the FTSE.
Good. Stay with us for a few more minutes. We have one question from Steve Rhodes here at TFNN he'd like to ask you. Can you stay with us till the break?
Oh, absolutely. Be delighted.
Thank you so much. We'll be right back with Stan Harley.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently Gartley has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're talking with Stan Harley, the Harley Stock Market Letter. Stan, we have a question from Steve Rhodes, and Steve happens to be quite famous now. He's the #1 timer for Timing Digest this year so far, or like last year, I guess. He got his picture on the cover, which is a pretty good deal. But his question is this. On your 150-day bottoming cycle, it seems to have inverted back in October of 2018. And his question is, with the next 150-day cycle, 59-day cycle being approximately May 21st, do you think that is a bottom date now, or do you figure that as part of an inversion of any kind?
Well, I think what he's referring to, this 159-day cycle, years ago, I thought that was the primary cycle in the stock market. I've since revised that. Now I think it's about 168 days. But that neither here nor there. Is it bottoming? I mean, it absolutely bottomed at the Christmas bottom. Cycles are not always fixed beat entities. They tend to expand and contract. So whether or not that cycle will top in May, I'm skeptical. I'll put it that way. I think the market is going to push higher, Larry and Steve, who I have a great deal of respect for, by the way. Yeah. I think we're not going to top in May. I think we're going to push higher into the latter part of the year. But we may have a period of consolidation setting up here, which I think could begin this week. We need to see evidence of that.
Yeah. Now, those inversions have always been a problem with cycle theory, but they're there, and you have to respect them. There's no question about it. The fact that
it usually happens when you and I write about it and say, we're going to make a. Yeah, that's when the cycle gods step in and say, not so fast, pal.
Yeah, it's that. I always look over my shoulder in the morning. That guy with the sickle that's wearing the hood. I just see if he's behind me every day.
Oh yeah.
But, you said between 159 and 168, my God, you're talking about, 11 days in a cycle that's a half a year long. I mean, that's nothing. I mean, that's less than 1%, for heaven's sake. That's pretty accurate as it is.
Well, just to put perspective on it, years ago, I found that the dominant trading cycle in the stock market was 40 trading days. And over the long haul, we tend to see lows at approximately 40-day intervals. Now, sometimes it's 52, sometimes it's 31, but that's the average over the long haul. And if you string 4 of those together, you get 159.2. And then I found that one of them expands a little bit by 1.236. So anyway, long story short, the average cycle is about 35 weeks, about 169 trading days. The primary cycle in the stock market over the long haul.
Okay, that makes pretty good sense. Listen, I want to thank you for being our guest, and we'll have you on again hopefully very soon. And I want to wish you and your lovely bride a happy Easter. And I'm hoping to get up there sometime towards the end of April so we can break some bread together. I would like to sit down with you and see you again after, what, 30 years or so? Yeah, we used to, yeah. I remember those.
Come on up to the Phoenix area, please do.
Yeah, that's great. Thanks a lot, Stan, and we appreciate you sharing the stuff with us. We'll have you on again sometime in May if that's okay.
Look forward to it. My pleasure.
Okay, you bet. Stan Harley of the Harley Stock Market Letters, always in the top 10 of the Hubert the Timing Digest, which is really great. And of course, with Steve being the numero uno, we got to give our hats off to him. So if you hear that sound of one hand clapping, Steve, it's for you. So we'll see it. The old 39 to 40-day cycle, that goes back to the old cycle book by Hearst, The Profit Magic of Stock Transaction. We used to get those. The nominal cycle was 36 to 40 days in so many things for so many years, all through 71, 2, 3, 4. And then in 74, things, really started to shift. And that's when I got into the astrology part. And what I found was when I was working with Dr. Miller, the thing that really made me realize that there was something big in astrology was the double bottom in October and December of 1974, because we had multiple conjunctions and oppositions with retrograde planets in both October and December of that year. In fact, what I'll probably do when we come back from the break, I can't do it today, but I'll probably do it on the afternoon show today between 3 and 5. I'll show that coming out of the Astro Cycles book, what that looked like, because that was a monster bottom, just like the bottom that we had in March of 2009, and then also, the big top that we had in 2000, March of 2000. All those were really moving around quite a bit. So we need to pay attention to those things. So, I know that astrology's there, but folks, I only find bits and pieces of it. We got some really smart people that come on here on this show here that really know a lot about it, and they have some pretty good calls. And of course, they have some calls that don't work, but they're first to recognize that, and that's the whole key. The professional trader recognizes his mistake and takes care of it as soon as possible. The neophyte trader will just sit there and say, "Hail Mary, full of grace, please get me out of this in second place," or something like that, because you can't pray, folks. Praying doesn't work. It works great in church, and we're seeing the big guy upstairs, but it doesn't help in the markets. You got to take care of it. The responsibility belongs to you, and you've got to be able to handle that. That's what it's all about. It's all about risk control. No more, no less. And so that's it. The other question someone's asked that we want to cover here before we come to the other part is that we've been looking for a potential 3-drive pattern happening in hogs. And if I want to bring this to your attention here, because if it happens, it really gives you an idea of what could be. We're trading up around almost near that 99 level again, but here's what we're looking at possibly in hogs, folks. You'll see here that there's a 1, 2, 3 pattern there. That's a 3-drive pattern. And all we need now is to get it up here, up around that 101, 102 level into early next week. Like the ideal time would be coming in on the 22nd. That would be an ideal time between 1 and 2 and 2 and 3, showing some great harmony. And that's nothing more than the upside down pattern that we had back there on February 20th when we were at the 78% level. Hogs went from 73 to 102. We bought those down there at 73. Unfortunately, we got out of them at 83, but that's neither here nor there, but they did go a lot higher than that. We fortunately stayed with the short gold. We're still short the gold, looking for our price level down there at 1257, 1260, somewhere. That'll probably be Monday, the 22nd, because that's where that head and shoulders pattern comes in. We've got a little bit of astrology stuff. Plus, we got that full moon coming up here on Friday, which will be interesting. Of course, us being closed then for the stock market, it'll be interesting. Now, foreign exchange will be open because the rest of the world, most of the world is, in other religions, so they don't always follow the Christian holiday. So there'll still be Forex trading on Friday and also Sunday night. So we'll be watching those as we get through here. Oh, my goodness, the time on the wall says it's almost time to wrap up the show. We got to pay a few bills here pretty quickly for Tom, and then we will get back to cover up what we're looking at on some of these other things. So we'll be watching it very, very closely, because the other thing we need to cover probably tomorrow, folks, is we need to start looking for a bottom in these grains. We're getting close, especially in the wheat.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a minute here and review some of the things that are happening today. You know, one of the things that I talked about in the newsletter over the weekend was the fact that we were reaching a really interesting spot here in the E-mini S&P. You'll notice here that the area we were looking at where the ABCD pattern was 29.25. We hit 29.22 last night. Whether that's going to be a double top or not, we're not sure, but that is a 3-drive to a top pattern. It certainly is. You've got the 1.618 expansion came in there at the 29.23 level, the high being 29.22. We're trading just slightly below that, so going above it would certainly negate this. But if you'll notice the bottom that we made there back on December the 26th, that was a 1.618 expansion from the low in March of the previous year. So may or may not mean something. That I don't know. So all I know is that the pattern on a short-term basis certainly is what it's looking at as we see these things going on. I'm going to be doing the show in the afternoon today between 3 and 5 p.m. How I'm going to be doing 2 hours is going to be interesting. I've got something planned. I hope it makes I'm going to get a little bit of educational stuff, a little bit of history, and maybe some of the old day stuff, and maybe a few racetrack stories. You know, that's one good thing about being old. The good thing you got going for you is your memory, because, boy, I'll tell you, I've been so lucky. Golly gee, even, when I have a bad day, folks, you know what I do? I go down to the Gospel Mission. And not very often, but I go down there, spend an hour or so and see what people are really going through. And let me tell you, man alive, there's some people out there that are really hurting. So anyway, always remember to try to do something nice for somebody else, because there's always someone a whole lot worse than you, and that's what we're put on this earth to do, is to take care of one another. Sometimes it's a little hard to do given the political environment, so live every day in an attitude of gratitude, and may God bless.